moving on to the other hat that you wear as a venture capitalist, you are a part of the Swiss Founders Fund. And I remember in one conversation you mentioned about the seasonality in the VC climate and the VC world, which is a founder's market and sometimes an investor's market. Could you just share the dynamics which are there, the thought process behind that?
Sure. Yeah, it's all goes in cycles, and so in crypto, for instance, it's normally a 4-year cycle, and it's very kind of like easy to predict because there's halvings, Bitcoin, etc. So it's like a cycle there. But the same happens also in Web2 and tech in general, and it's very dependent also on kind of like the macroeconomic environment, which is normally the lower the interest rates, the more investments go into alternative investments. It's cheaper basically to raise capital, to leverage, take up debt, etc. So it's like there's normally the lower the interest rates, the more kind of like free capital, and capital needs to be allocated. It's normally good for equities. It's not so good for bonds. And so often in that case, it's easier for venture capitalists to raise another fund because it's an alternative investment,
Right.
Which supposedly to return better than if you invest into kind of like capital market where you get like 0.5% or like not even, on for long-term kind of like bonds. So then in such an environment, in low interest rate environments, which we had, for a very long time between kind of like, the great financial crisis in 2008, 2009, up until kind of like the end of 2021,
Right.
there was a very low interest rate environment. And so that helped VCs to raise funds from institutional investors that were kind of like chasing higher yields, which they couldn't find on kind of like public markets or capital markets. And so these funds, normally they have a life cycle of say 7-8 years, and then maybe 1 or 2 years that they could extend. But they need to deploy. So normally it's like a deployment period of a fund. When they raise a new fund, they have, say, 3 years to deploy the capital. And then the remaining kind of like, life of the fund is just to either do follow-on investments. And then after, there's 7, 8, 9 years, they should try to close the fund and then return the capital to their LPs. Or normally what they do, they just like, add another fund and convince their LPs to not, take the money back and just put it into the next fund. And so the funds get bigger and bigger. And so we had such a long period where it was easy for VCs to raise capital, and then there was this, in a way, deployment pressure also by these VCs to actually spend, the money. Normally, this innovation is fairly linear. You always have kind of like spikes, and right now, it's kind of like the AI spike. There's like so much happening in AI right now. There were like spikes in fintech. There was like micromobility. There was quick commerce. There's always certain hypes where either there's really innovation there, or it's just like copy of the same models in different geographies, but there's investable kind of like companies, but it's more linear. Whereas like for funds, the funds get bigger and bigger and they have deployment pressure. So you have more capital chasing the same amount of companies basically. And so in such an environment, it's good for investors and it's easier to raise money because